So you have two people, one who syndicates real estate and creates a real estate syndication, and they manage to raise money, and they talk about how they managed to raise millions and get a good return for their investors. You have another that happens to create a real estate private equity fund, and he gets to raise more money, he has more flexibility, and he has a bigger track record and reputation. What really is the key little known difference that separates these two? Well, it's when the syndicator knows when to syndicate, and the private equity fund manager knows when to launch his private equity fund. The main difference that everybody gets wrong between the real estate syndication and the private equity fund, one little known tip is really the status and the brand and the reputation around doing a private equity fund. Syndications, sometimes I guess the main difference is really when you're syndicating real estate, you're focusing on one asset, right? Like one piece of property or one piece of land or whatever, which is good in a sense. But sometimes when people raise money for a syndication, they look, there are different ways of doing it. There are some ways that are quote unquote more beginner and more quote unquote low status, and then there are some ways that are really experts and really professional. And when you're looking to raise millions of dollars from investors, you have to do things in the professional way if you want to get the track record and respect that you want. So the way that people do the real estate syndications is, let's say that you're working on acquiring one piece of land, or let's say that building behind me, for example. What people would do, they would create, I guess the best way that we, Raises.com, for example, and our members and people that work with investment banks and so on, the best way that we know and how people create these real estate syndications is to create it as a limited partnership and sell the units of the limited partnership as a private placement. If you're working on raising capital for the down payment. Let's say you want to buy a $5 million deal and you don't have the 25%, the 1.25, to put into the deal. What some people would do, they would create a limited partnership, right? A limited partnership just to sell units into that down payments. They'll put like 10% of that 1.25% to show that they have skin in the game, and then they'll raise money via selling the other 90% of the units so that they can buy that down payment. And so, let's say the name of the apartment is 123 Fake Street. They would raise capital to buy 123 Fake Street. And then that's pretty much how it goes. But there are other ways of doing syndications where people just create an incorporation and then they look for business partners to fill in that, be full-time business owners in that corporation. And people do this all the time, and the SEC knows it and everything. The only thing is that, it's quick and dirty. It can kind of limit you to a low status kind of, way of doing it. So the second way is the private equity fund, and the thing that prevents people from going through the private equity fund route is track record. Because if somebody just invests in real estate directly, why would an investor trust them to manage their money and invest it in multiple deals where the investor could just choose to do one deal at a time? So that's the number one objection that people get, and it has to do with track record. That's why there are two groups of people who we work with at Raises.com. Those who have worked on multiple real estate syndications and are looking to set up the private equity fund because they have the highest levels of success to actually get funding for their private equity fund. And then those who haven't done any prior syndications or prior equity deals and are looking to do their first. So if you were to work with people to do that, then you have a bearing on which one to do. And ultimately, it depends on how experienced you and your management team is, whether you're looking to acquire one deal or multiple, and whether you're willing to go through the private placement routes for your private equity deal. JVs and all this can work, and creating an incorporation and doing all this stuff can work, but long term, if you're looking to raise like tens of millions of dollars or even hundreds of millions of dollars, private placements is usually the way to go, and working with institutional investors. And so with this, I hope this gives you some clarity on which path you would take, whether you be the syndicator or whether you be the private equity fund manager for real estate. And if you need help on actually getting this done and actually building this, just make sure that you head to